Hello and welcome to this. This is one of many battles that the Property Investor Show is going to arrange and orchestrate in anticipation and in the run-up to the Property Investor Show, which is on the 1st and 2nd of April 2022 at the Excel Centre once again. So for this battle, I'm delighted to introduce two industry heavyweights. One is James Forrester, who's from Barrows and Forrester estate agents in the West Midlands, also managing director of Stripe Homes, a house builder in Newcastle. Welcome, James.
Afternoon, how are you? You okay?
Good, thank you. I'm looking forward to this. And your challenger in the blue corner, I guess, is Marc von Grundherr, who is director of Benham and Reeves, the leading London estate agent with multiple offices also throughout Asia. Welcome, Marc.
Thank you very much. Nice to be here.
So look, guys, what I want to talk about, because I think given the property market and the way it's kind of shaken out over the last 18 months, kind of to everyone's surprise, bearing in mind lots and lots of doomsayers, not you two, by the way, but lots of doomsayers were saying that COVID would result in huge drops in house prices. And of course, we know that the opposite has happened across the country. But there is a bit of a divide, and that's what I want to talk about, really, the difference from a property investor's perspective in terms of what the market's done in value growth terms and maybe also in terms of rents. And if I'm an investor thinking about investing in property and expanding my portfolio, the question is whether I should buy in London and the south or whether I should buy in the north. Now, you guys obviously come from two very different parts of the country. You're both very successful, very knowledgeable. You're property experts in your own right. Obviously, you do TV, radio. You're often quoted in the press. So you guys should know what you're talking about. So I'm going to kick off with the first question, James, to you, if I may. So northern house prices seem to have done pretty well over the last 18 months, even better than London and the south. So firstly, do you think that makes the north a better place for investors to invest? And secondly, is it sustainable?
Well, it's two different questions, isn't it? I'm definitely going to think it is a better place to invest, being from the north myself. We're a lot more friendlier bunch. And I think you've got to look at the investment of what you're looking for. Is it rental yields, capital appreciation? The north has for many, many years seen no investment coming into it. I'm sat in Birmingham today and speaking to someone earlier. The last time he was in Birmingham was 15 years ago, and he was shocked with the change. And then why it's taken so long for a global city outside of London to really develop. And the likes could be said of Manchester, Leeds, Newcastle is just coming on the map now, as well as probably the next big city in the north, really, to see that expansion. And when you've obviously withheld a lot of funds for infrastructure projects, airports not being extended, routes being given, it's now opening it up to a much bigger international market, which does lead a lot of investments obviously coming into the cities, but does great for the local economy. We have the Commonwealth Games coming in Birmingham in July. Again, great for the city, great for the local community. We've seen a major push in the prices. Birmingham, I should say West Midland prices, not rather than just Birmingham, have gone up 11.5%. In the last 12 months, which is a great explosion. Now, the key would be, can they hold that value? Or will we see the same increase going ahead? And I don't think we will see the same increase going ahead, but they're not certainly going to go down. We're probably going to see further increases of more likely between 5 and 7%. As we constantly see, the infrastructure of the roads are changing, the tram network is extending, the new hospitals that were currently stalled are now obviously back on track, obviously being built. Birmingham Airport, new routes, we've seen that with the airlines now starting to come in. And again, this is just in the West Midlands, obviously where I am. And that's what we're going to see. Rentals at the moment, we can't get any stock quick enough to have rented out. It will take less than a day to have something put on the market before it's gone to a qualified tenant.
And that James, that regeneration that you're talking about, so whether it be the consequence of the Commonwealth Games, which obviously is a big, big deal, or you as a Newcastle supporter, obviously Newcastle Football Club's taken new ownership, or there's new ownership of Newcastle Football Club recently, there's bound to be an influx of interest in the area and regeneration as a consequence. How important do you think that is to shore up those local property markets?
I think it's very important, and not everyone's a fan of overseas money coming in, but we have seen that in London over the years. A lot of overseas money came in, and it's done the world of good. And now it's about time we do see that going forward in the northern cities, and we see the levelling up that has been promised time and time again by the government. It does look like Michael Gove is actually serious about this, and we are starting to see a lot of strong headlines that the money is going to be filtering up north. We're also seeing this from the big companies moving outside the city now, and they do want to change it. Where, let me just turn my phone down there, apologies, very busy up here. You know, from Goldman Sachs, HSBC, the HS2, now I know that's a different topic for another day, but once again, it's the job creation that's coming in, the skills that are either being applied locally through new training centres that are set up, or workers obviously that are now having to relocate from different parts of the city or the world, moving into the northern regions. And I'm very excited for the north going forward. As I said, I think it is sustainable. I don't think it will be at the same level that we've had. But it's about, like any investment, it's location and getting in at the right timing. You know, after that, you know, it's different. You're in an established area. What we are seeing in the north, though, is very much a polar effect as well. It's not just the major cities doing well. We're now seeing the suburbs and the little villages and towns around the cities really starting to pick up and do well, and a lot of investment locally is going into these areas. And of course, people are having a great place to choose where to live, either the city living for convenience, or they can move out into, as we would call, the countryside, and they get a lot more green space, you know, and a different style of living, maybe for more families rather than couples.
Well, so Mark, quite a case there for the north.
Good case, good case. I mean, can I just add something in there, Russell? It's interesting when we're talking about the increase in price in the north, and frankly, I'm not bashing the north by any stretch at all, because actually we do sell stuff in Manchester and Birmingham. But let's look at annual price change. The north did on average 9.6% last year. The south did 10.2%. So it's always nice to be told that London and the south are dipping below. London was in there lower than that at 5.5%. But, you know, that differential, then, you know, south increasing better than the north, which is against what people thought. So Mark, let's talk about the London thing particularly. Look, the south is not just London. We all know that, right? So it's a rather bigger region than just London, but the south does well, you could argue, as a consequence of what emanates from London in terms of, you know, financial capital and, you know, being the capital city and everything else that reflects from that. London, of course, has a head start, doesn't it, in terms of capital values? What is that differential, just to give people an idea of the difference between a London property and a typical northern property? And I think the average house price in London is £521,000 at the moment, as opposed to, you know, the average in the north is anywhere below 300. So it's 160% more in London for London than the rest of the UK. So is there an argument, if you're an investor, you know, you can afford to have a lower rate of capital appreciation in percentage terms to get a higher cash gain in 100%. It's simple mathematics. If you're going to invest £500,000 and it goes up by 5%, you make £25,000. If you invest in a property at half that, at £250,000, it has to go up 10% to have the same capital increase. Yes. So in terms of, you know, the actual total growth, I think London does have it in terms of, you know, total cap value increases in cash terms. In cash terms. Yeah. And what's happening in London right now? Because look, London, you kind of glossed over it a bit, if you don't mind me saying. London's been the poor relation, I think, over the last couple of years compared to everywhere else. What are you seeing now genuinely in terms of the London market bubbling back? So I think it's interesting what James is saying about the north, and but let's be honest, London will always be London, and I think the reality is that rents have jumped over the last 12 months. We've seen rents jump 12% on average, which is very strong growth. There was some, you know, London fell behind. Of course it did. You had everybody wanting to get more space, working from home, moving outside the capital. There's been, and in addition to that, there were no overseas students because they were all studying from home. Last year, as offices started to reopen, Goldman Sachs, which James mentioned, you know, what did their CEO say? I think working from home is an abomination. I don't want anybody working from home. And in fact, that's the reason they opened the centre. They're opening the centre in Birmingham because they want everybody back at their desk. So we saw a massive reversal of people working from home coming back into the city. So because of that, James has the same issue. I noted him saying that we have no stock for rental at all. We've seen, we've got tenants trying to renew from last year, and I've seen rents up to 30% increase. And they say you can't ask that much. And I'm not saying the market's up 30% because the figures don't show that. I'm saying selected examples there are.
Yeah, you've seen instances of that.
Yeah,
and so it sounds like London is kind of more at the beginning of its journey upwards then in terms of capital appreciation and rent. So where do you think that goes over the next couple of years, notwithstanding what's happening in the world right now? And obviously bearing in mind this particular battle will be kind of embedded in cyber history. So people might now be watching this and, they're in 2023, 2024. So hopefully the current troubles in the Ukraine will be a distant memory. But notwithstanding that, how sustainable is that for London in terms of increases in rental and capital appreciation?
Look, I think the rental market, the rents have been depressed and held back for a long time. So the rents we're seeing increases now were expected, and I think it's going to continue. I think capital prices, look, we've had no travel. Everybody terrified of COVID. So no one's been coming. As overseas people and start to come back into the UK and travel reopens, you're going to start to see prices move. People from the Gulf will come in. People from Asia will start to come in. You've got that massive red flag waving nation. They're desperate to get their money out. The Chinese are still buying in bulk. And so I think all of that together, you're going to see prices grow. The prices where you've seen prices come off, I think that's quite limited because there's an awful lot of cash sitting in the market. People aren't under pressure to sell. We have, most of our vendors will say to us, they don't want to sell if they don't get this price, and they just sit it there and they keep renting it. And, my view is in terms of capital growth, if I wanted to put my finger in the air, I would say we're going to see 5 to 6% over the next year. And then the same the following year. I've seen more and less than that, but I think that's quite sustainable. And I think it's a good, safe figure to stick with.
So that's kind of 26 to 30,000 pounds increases in cash terms. So James, you'd have to go some, I think, in terms of your average house price being quite a bit lower to match that. But I guess, look, it's not all about capital appreciation.
I'll just interject there, but also it comes down to affordability because not everyone's got that level of cash, sitting there. I get in London, there's some very rich owners. But if I'm talking the general public who would hopefully be watching this, obviously it's the investor show, who are thinking, well, how do I get on the market? Because with an average price, if I just take London as the example, of £521,000, when in the Midlands, you can be getting right in the heart of the city at £212,000. So effectively, you can have 2 properties rather for 1. So for the mathematicians out there, it's easy working out your figures, and also it spreads the risk because you could go into different cities and build your portfolio up going from there. And the affordability is on the deposit scale. It's great being a cash investor, and we all know cash is king, but the majority of people don't take cash. It will be buy-to-let investors who will have mortgages attached to them as well. And they will typically be working on their 25-75 ratio.
But I'm giving average house price of 521,000. Where do we recommend people go? Zones 4 and zones 5, where you can buy a 1-bedroom flat for £300,000. You have to compare that with the North. You can buy a 1-bedroom flat, £250,000 to £300,000 on the slightly further areas. It's on the tube network. You're still in London. You can get a 75% loan to value. I don't think there's as big a differential. Clearly, the average.
How long would it get from Zone 5 into the city centre of London? Because last time I checked,
30 minutes
for ages.
30 minutes.
I've got to be queued up by sardines. This shirt would be a different colour getting off the tube as I'm rushing to the.
It's not like that. We haven't got any tourists at the moment.
I might be scared of catching COVID because I'm all rammed up together, and from there, where for the same price, I could have a lovely 5-bedroom detached house with garden by the canal network, less than 15 minutes from the city centre.
Yeah, but James, the interesting point about that is I'm talking about a 1-bedroom flat, which we all know are in the biggest demand. So it's going to rent every day of the week. 5-bedroom house, is that going to, if you're going to let that as an HMO to sharers, it's another thing. But are you going to, how many families are looking for that? Do you not end up with a quite long void on a 5-bedroom house.
It's a thinner market, you mean? Yeah.
If you're looking at HMOs in Birmingham are overwhelmed at the moment. There's the big demand. If we want to go, if I was taking a typical 1-bedroom apartment here in the city centre, you know, you could pick them up for £200,000 all day long, and they would be decent. You know, so I'm going like to like quality, or obviously the type of properties that you're renting all together from that. But then I'm right in the heart of the city. I could probably come out my foyer, you know, and have all the bells and whistles, you know, of gymnasium on site, you know, the cinema rooms on site, but I could be within my workplace within a 5-10 minute walk, if that. I don't have to worry about the rising travel costs that London are constantly getting.
So James, answer me this. What's the appetite for landlords right now? Now, I know you guys have a vested interest in saying, oh, it's all fine and wonderful, but what is the appetite from landlords locally where you are right now in terms of, you know, thinking about their portfolios? Do you think that there's a kind of net positive? So landlords are saying, I'm going to continue to buy, I'm going to continue to hold, rather than there being an exodus of buy-to-let sellers?
So you, being frank and obviously looking at the future, you've got two types of landlords. Well, you've got a few different types, but if you look at the two, you've either got ones who are sitting very nice because of the yield that they're now returning in the north. You've got to look at it. They're not, you know, financed up to the hilt because of their prices.
Well, recently they're quids in, right? They're quids in.
Yeah, they're bought at a much lower value. They're seeing obviously much bigger increases. So they've obviously got the equity in the property, and obviously they've got the tenant demand and great yields for it, which is that's there. So what we're seeing is a lot of landlords are quite happy to hold constantly. I think the world has changed. Everyone's after appreciation. They want to see that yield, you know, year in, year out. They want no void periods. You know, as a company, we've only had one tenancy throughout the last 2 years, and we're talking hundreds and hundreds of properties that's only had one void period. You know, that gives the demand on it. So the difference is there. You've obviously got going forward, because you know, if I'm looking at all different parts of the north, so I'm going to specifically look at the Midlands and the northeast for obviously where I specialise in, the cities are relatively small. We then instantly move out into the suburbs. When you go out into the suburbs, it's a little bit different. It's a different type of rental. It's not your 1-2 bedroom apartments. You know, you're talking your 3, 4, 5, 6, 8 bedroom houses. The difference is there is going to be all about the EPC, the energy performance certificates going forward, because a lot of houses may not have obviously reached. We know that they're changing in April. The big one will be 2025, you know, where everything has to be C or above.
Yeah.
Now, the worry, of course, is for a landlord watching this, if you're thinking of exiting, you need to exit now. Don't wait until 2024, because savvy investors, like Mark, I know he invests, I invest, you invest, Russell, you're going to sit there and go, this is perfect, because you can't rent it anymore if you go past that date. You know, so you're going to have to sell and to take the price.
Or you're going to have to spend a lot of money.
Or the flip side is you're going to have to spend realistically, you know, it depends on how bad your house is, but you're probably going to be around the sort of 10 to 15,000.
But I mean, because it's an interesting question about people exiting. We saw quite a lot of people interested in exiting, but again, I think the reality is with a property investment, it's a good long-term hold strategy. And I don't think it is something you should be looking to go in and go out very quickly. Yeah, you might get hit with EPCs and have to do an investment in your property. And I get it. If the capital values are so much lower outside London, then if you have to spend 20, 30,000 pounds on stone walling or whatever it's going to be to make
if you own 15 properties,
it becomes a huge bill.
You're in a
but James, that's the point, isn't it? You're advocating spreading your risk and diversifying and going into 10, 15 different properties because your capital value is lower. Well, now you've got a problem with EPCs. With us in London, you can't go below. Yeah, okay. I have a client who's got 50 studios and their average purchase price is about £150,000. But they won't have a problem with EPCs because they're in relatively new builds. But
if you come outside of London, then it's a different story again.
It will be on houses.
I was taking Birmingham City Centre, Newcastle City Centre, Leeds City Centre, and just gone from city to city, there's not an issue. But when you go into the suburbs, as we all know, there is landlords and it's a different story. So I think the difference is when people are looking, is not everybody wants the 1-bed, 2-bedroom apartment. Landlords will be looking, can they add value to the property? Does it need an extension? Have they, do they want an extension? Can they go higher now with committed
value? I think
it adds the value.
I think Mark makes a good point in terms of the fragmentation of having more properties for your pound in the north in an EPC context. I think that's a really good point. But I guess, look, I'd throw something in that might counter that, and that is the question of stamp duty. Now, what do you two both think about stamp duty, given that if I'm buying something in the north at 200 grand, I'm going to pay a tiny amount of stamp duty, even if I've got to pay the 3% surcharge as an investor? Mark, in London, I'm going to have to pay a far greater percentage and a surcharge. So does that mean that I negate my return for what, a year, 2 years? It's all gone to the exchequer?
Look, stamp duty is an enormous issue, but, with my property hat on, as my property agent hat on, I think it's a nightmare. With my UK resident hat on, I think it's outrageous that non-residents had it so good for so long. And actually leveling it up, if you look what they've done in Singapore recently, they've just whacked on an additional 15% stamp duty for non-residents buying in Singapore. Now, you're 100% right, that negates your return. Of course, it's going to affect your return. But as I said just now, buying a property should not be a 2-3 year process. You should buy 5, 10, 15 years. Look at our wealthiest families in the UK. Where has their wealth come from? It's come from ownership. Do you think Grosvenor, Cadogan, Howard de Warden Estate, all of the big estates, the Leicesters, all of these families, have any of them started extinct? No. Are they increasing their portfolios? Yes. Has, the Crown, have they sold any of their stock? No, because long-term property is where you'll see the
the majority of their portfolios are in London, Mark.
Yeah, not all though. They own massive. The Crown owns massive estates all up and down. The Duchy of Cornwall and the Grosvenor estate. Huge swathes of land and properties. So where I'm saying is 100%. Going back to stamp duty, it's a massive, massive, massive issue. However, over the long term, it just gets flushed through. And I think, it's a tax, right? And you just have to accept it.
It is the cost of doing business, I suppose. But it's a big advantage for you guys up there, right?
It is.
It's a massive advantage. And I think Mark's just touched on, a major thing. Property is not short term, it is long term. And regardless of, as an investor, if you're buying for rental or capital appreciation, you've got to stick it in the long term to get the best benefit. However, the one thing I will say, the key thing, obviously, because obviously we're specifically more on London here, if you took the overseas money out, then there is a major issue with London. It is very centered around overseas money flowing in.
Yep.
Now, a lot of restrictions are happening around the world at the moment. And I'm not just talking about the current, I'm talking in general. Anti-money laundering will get tighter and tighter. And people will. China, no doubt, will start to really put restrictions on getting money out of the country, because when things are going wrong, people like to hold on to it more and more. And if that money starts to come, London starts to see a complete negative array of what's going on. I think London hit its peak, personally, from that. I do like London when I go to it. I'm not an over fan of it. I don't like getting on the tube and being crowded by tens of thousands of people. But
nice to have the option though of using the tube as opposed to having to take the local bus.
Well,
that's become very.
Mark, I expected better than that in the north. We do have electricity up here, and we have in Birmingham we have a tram network that's being extended out, and that's going all the way into the outskirts. It's not just being locally, so that's allowing people who might want to live in the Black Country, for example. Obviously, Peaky Blinders, as we're filming this, is currently back on TV. So over in Dudley, we'll be able to get into Birmingham. Never has that been done before. What that will do for investors is open up Dudley massively for the north. You can buy a 1-bedroom apartment in Dudley for £100,000, and typically you'd be netting 8 or 9% yield. That's a great investment, for £100,000.
Which you won't get.
But let me go further. Newcastle has had its metro system for just as long as the tube, and that's where you can go all around the city of Newcastle and out to the beach. That's something London can't do because the Thames, you can't really class it. Nottingham has a great network again inside Manchester, which is, even though I'm from Newcastle, I grew up in Manchester. I remember when the metro first started there. You now look at it, they're fighting to double or quadruple getting the trams down to it. So unfortunately, Mark, we do have electricity. Coal is obviously not as powerful in the north anymore since it's not produced, but we do have our own transport links.
So Mark, James has set out there other reasons for enjoying the north, I suppose, and for seeing it as a kind of prosperous place to be. So infrastructure, the sites, the Scarborough Beach and whatever it might be. What about London? So are there some soft reasons why people should think about buying in London? You know, whether it's the sites or shopping. I mean, what are the soft reasons to buy in London?
I think if you're buying for investment, I think you actually should be slightly clinical about where you buy. And I think a lot of people do get their judgment clouded by what they buy by coming and they want to be here or they want to be there. And I think actually, of course, London has its reasons, has great theatre. And before you start saying, I'm not saying you don't have theatre in the north, because obviously you have pantos. No, you have good theatre in the north. And obviously you have good, all of those soft things you do.
I think some of the best actors in this country came from the north.
Yeah, I know, but they're all here now. But they're, but we had the advantage of living in London, the buzz and the unfriendliness that you seem to think everybody in London is like.
It's not just me. That's in every recent survey. I think when we look at the top 10, London, or the only place that's close to the south, I think, is Reading. Which is the south, but everywhere else is in the north or the west country.
It's not so much about that. I mean, I do think there are advantages to living in London. It's all the restaurants and the life of living here, the facilities that it offers. You know, the museums, all of those things. I'm not saying
culture and the ambience, right? The culture.
There's the general ambience, and London will always be London, and people will want to be here. But I still go back to what we said at the beginning: is people, when they make an investment, people should be a lot colder than they are. They get very personally involved and they want this, they want that. And actually the things you should be looking at is what do tenants want, you know, in order to drive your investment. And I think that's fundamentally one of the key drivers. And I think as the North develops, and, you know, James quite rightly mentioned, there's loads of overseas money pouring into your main cities now, loads, with the big, you know, London developers, some of them coming up now. But I think you will see the same type of facilities which will drive the service charges and will affect the, you know, city centres, whether you're going to end up all excess supply or not, I don't know. But
gentlemen, I'm going to separate you now because we need to bring this to a close. So that
I think I've got to be allowed to come back on that one. So
go on then, have a final say. Then I've got one more question for you.
Well, service charges, of course, will increase because we're talking about cities, and that will just happen with general inflation as costs rise. But the difference is, as we mentioned earlier, London has always had the money. So the north, it's filtering through. You know, Manchester, you know, realistically in the last 3-4 years has become an absolute, you know, I've always been a very proud person to grow up in Manchester, but you look at it now compared to when I was 16 to now, it's a complete different city. The last 3 to 4 years, you're seeing it come through. Birmingham, exactly the same. Newcastle, Leeds. So it will take a long time before we see this. And when I took the one thing I will always defend the North. Marc's always going to defend London and the South. That's just our nature in the game. But one thing we will always agree on is landlords have got to be, you've either got professional landlords who totally get it. It's all about the tenant and where your return's coming from. Yep. You obviously have accidental landlords or people who are looking to get in the game, and they do get emotionally attached. They've got to fit, it's a business transaction. You know, you will have bad debtors, as in void periods, people who don't pay your rent. But you've got to go where the employment is. There's no point going to, you know, in the north, as I'm sure there is in the south, there are certain areas that have not changed. They probably won't change for a long time. The demand is not there to go to it. And you have to look at your...
And hence the government's levelling up agenda. Right, look, let's finish on this note. Let's see if I can get you to agree on this. We've had a really great, frank, and actually quite a humorous debate about North versus South. Would you both agree, though, that as a landlord, whether you invest in North or South, you're going to be okay?
Do you want me to take that? Yeah, my answer is yes. I mean, and no, but the interesting thing is, as I said at the beginning, I'm not, you know, we're not anti the North. We sell in Birmingham, we sell in Manchester, we sell in northern cities. The reality is, what I always say to people is, you know, diversification is really important. So if you do, you know, we have clients who own London portfolios that have now bought a couple of properties in the North, and vice versa. We're seeing people from the North come into London. And I genuinely feel that long-term property investment is still the best form of inflation control, because if inflation goes 20%, cap values go up. And I think it's a very, very, very good hold. Where else do you get an investment where you can walk into practically any bank and get 75% loan? You can't do that for equities. You can't do that for gold. You can't do that for anything else. And to think that even if capital values don't rise and we don't see, you know, more than 5% growth over the next 2-3 years, you're getting a decent yield, which is paying your mortgage, for heaven's sake. And even if you sell after 10 years and your capital value has only increased by 30%, if you've paid your mortgage down by 30%, that's a gain. People don't often take that into account. They should take the cash they put in at the beginning and the cash they take out at the end. And I genuinely think, while I love the South because I live here and obviously this is where our business is, I still think if you're careful and you take a cold, hard view at investment, it shouldn't really matter where you do it if you pick a decent, strong area.
James, quickly, because we're well over, you would agree, I'm sure.
I agree. It comes down to affordability and where you are in your investment cycle of where will allow you to purchase as well. So like Marc said, there's obviously great returns in the South in certain locations that he can advise on. But if you haven't got the capital to do it, you'll come to the North, and you will just get an equally just as good place, if not better, with the appreciation. But the good thing is we have to remember, we're talking about England. We're not talking about Wales or Scotland. If we had to put the UK in, because they have different, obviously, rules in Scotland. But if you look at the UK, we're an island. We do not have masses of land to build on. We build less than 300,000 properties a year is what's needed to keep up with current demand. It's not been built like that for 15 plus years. We're playing catch up every year. I think last year was 240,000. So we were way under. And I think that's what
good environment.
People have got to remember, that we are a small country. Now, the fixes to do that is we start to see a lot more skyscrapers go up. And, we see the American, Singapore lifestyle, what I call the powerhouse cities of the world, because typically they've all got big skyscrapers. The UK is not always, or England's not really a big fan of it all the time. But you've got to be careful of where you buy. It's all about the location. It's all about where the jobs are. And it's also about having your strategy correct from day one. And if you do that right, as Marc said, you will get your money out. You will do very well. There is no bet, there's a lot of new things that come on the market that we see all the time that people are going to become, with crypto, the equities, the gold, they are so volatile on the markets. What's happening? Currently with the conflict, a lot of crypto devalued completely straight away. Gold is changing, and everyone was expecting to go to all high prices.
I need to draw a line in the sand. You two could talk about property all day long. And look, can I just suggest to the audience here, if you've got any inkling about investing in property, whether it's London and the Southeast, or whether it's the West Midlands or the Northeast or the Northwest, speak to these guys, honestly. So look, James, Marc, I am delighted and really grateful that we had this conversation. I hope you've enjoyed it too. I'm now going to stop the recording and pass this on to the editors who've got to pick the bones out of this, which is going to be fun. Look, guys, thank you very much indeed. Until next time.
That's great.
And thank you, everybody, for watching. And don't forget, Property Investor Show, 1st and 2nd of April at the Excel Centre once again. You might even see these two guys there. Many thanks indeed for watching.